Good morning, everyone. Well, the euro came under pressure on Tuesday after a report in the Wall Street Journal that the Bundesbank is willing to back an array of stimulus measures from the ECB, including negative rates on bank deposits, fixed-rate full allotment operations, and the purchases of asset-backed securities if the revised ECB staff inflation projections for 2016 that will be released in June support the case. The article also said the Bundesbank remains opposed to quantitative easing. Euro-dollar briefly fell below 137 for the first time since April 7th, but found support near the 137 zone after U.S. retail sales slowed more than anticipated in April. The market's generally long euro and so should find it easy to sell, except people have been burned so many times by thinking the euro had headed lower, only to find it bouncing back. On the other hand, few people are willing to pick a bottom when it looks as if this may be the real thing with regards to a change in sentiment of the ECB. For now, the market may be targeting 136.75, which would be the 61.8% retracement level of the advance from the 3rd of February to the 8th of May, when it went from 134.75 to 139.93. The highlight today will be the pound. The Bank of England's quarterly inflation report is coming out. The key point there is that the monetary policy is focusing on spare capacity, which the Monetary Policy Committee estimated it was around 1% or 1.5% of GDP. Investors will want to see whether the committee has changed its view on the degree of spare capacity in the economy. The UK employment rate for March, also coming out today, is expected to decline to 6.8% from 6.9%. That's further below the 7%, the Bank of England's 7% threshold. Both the average weekly earnings and the employment change for March are also forecast to have accelerated. These developments are particularly significant as the MPC has said spare capacity is concentrated in the labor market. So if they reduce their assessment of spare capacity, then investors are likely to bring forward their estimate for when UK rates will start to rise. That could push up the pound. However, the news may already be in the market as the cable has actually been falling since last Thursday. Positioning in sterling remains quite high, so the hurdle for investors to add to those positions could be quite high too. The market may be waiting to get the Bank of England MPC minutes a week from today to learn more precisely what the MPC members are thinking. The technical picture is neutral. We have two ECB speakers on the European agenda today, Mr. Mersch and Mr. Weidmann. Again, it'll be interesting to see if we get any more revelations about the Bundesbank's thinking. Is it just a coincidence that yesterday's revelations about the Bundesbank's support for the ECB from an anonymous source came on the same day as Mr. Weidmann was making a speech? Perhaps more anonymous comments will appear by magic today, too. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.